You're listening to AI Prism from Seoul Economic Daily.
Korea's bank lending rates just broke 6%, and the regulator is expanding liability rules for voice phishing losses. Three numbers. 1. Personal credit loan ceilings at NH Nonghyup Bank hit 6.18% this week, up from 5.65% just days earlier. 2. The 5-year bank bond rate rose 0.187 percentage points in 1 week to 4.394%, pushing mortgage ceilings toward 8%. 3. Shinhan Financial Group is canceling 500 billion won, approximately $328 million, in long-delinquent debt this year under a new inclusive finance program. It's Thursday, June 11th. Let's break down what's happening in Korea's financial sector. Three forces are lifting Korean rates in tandem. The Bank of Korea is expected to hike its benchmark rate in the second half of this year. U.S. 10-year treasuries climb back to 4.5% after strong May employment data, raising the possibility the Federal Reserve pivots to hiking. And the $1 rate has held above 1,500 won for 17 consecutive sessions, adding imported inflation pressure that limits the Bank of Korea's room to hold. Here's what the numbers show. The 1-year bank bond rate rose 0.163 percentage points over the past week to 3.616%. Mortgage variable rates at the 5 major banks now span 4.51% to 7.50%, with market participants projecting the ceiling breaks 8%. A financial industry official said borrowers who leveraged aggressively into stocks and property, Yongkul and Bidu buyers, are facing sharply higher interest burdens. The Financial Supervisory Service plans to meet card industry representatives this month to discuss extending liability to voice phishing cases where victims directly authorize the payment. Under the current November 2024 voluntary standard, self-authorized transactions are largely exempt from bank or card company compensation. The FSS is targeting a revision that closes this gap. The Financial Services Commission chairman met with CEOs of the 5 major financial groups on June 10th to address AI-driven cybersecurity threats. The FSC will pursue full removal of network separation rules for financial institutions with verified AI security capabilities, a step beyond the partial relaxation enacted last month. KB Kookmin Bank issued a $100 million 2-year digital bond in Hong Kong using HSBC's blockchain platform, priced at SOFR plus 40 basis points. Settlement was cut from 5 business days to 3, the first blockchain-based foreign currency bond by a Korean bank. So what does this mean for those tracking Korea's financial system? Earlier, we noted personal credit rates have breached 6%, and with the Bank of Korea expected to hike, the transmission into consumer costs is still early stage. The risk concentration is now visible on multiple dimensions at once. Mortgage rates approaching 8%, a 37.9 trillion won margin loan balance in equity markets, and 39.9% of surveyed Korean companies unable to cover interest from operating income, a record high since 2013. The KB Digital Bond and Shinhan Inclusive Finance Initiative represent constructive structural signals, but neither offsets the systemic pressure building from the rate environment. What to watch? 1. Bank of Korea Monetary Policy Committee meeting date. The July session is the most likely venue for a rate hike announcement. 2. FSS credit card voice phishing liability consultation outcome. Industry response this month will determine the revision timeline and scope. 3. 5 major banks' June loan rate updates. Further movement in the 1-year bank bond benchmark will push both credit and mortgage ceilings higher within weeks. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Efra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.